Good morning, you're watching Market Cafe with me, Shreyanshi Singh, and over the next 1 hour, I'll take you through news and updates from within the country as well as across the globe. So let's take a look at the US markets then and look at what kind of a handover we're getting coming in from the international markets. When you look at stock futures, they were little changed, and this is as investors pass through another slate of quarterly results halfway through the corporate earnings season. Now, when you look at futures tied to the Dow Jones Industrial Average, they fell about 16 points. S&P 500 futures also pulled back just slightly. When you look at Nasdaq 100 futures, they also pulled back slightly. Now, Tuesday's results marked the halfway point of the fourth quarter earnings season, and shares of Snap, when you look at it, pulled back more than 31%. And this was after the social media company missed analyst revenue estimates. Now, when you look at automaker Ford, that gained more than 6%, and this was after beating Wall Street's fourth quarter estimates and issuing higher than expected full year guidance. Now, Ford also announced plans to issue a special dividend, and a strong earnings season coupled with expectations for an interest rate cut by the Federal Reserve has been a source of strength on the Wall Street. Doubts have crept in, of course, after Fed chairs signaling last week that investors may have to wait longer than expected for a central bank pivot. But that aside, we did see some solid action coming in terms of Wall Street earnings, especially with the automaker Ford. But when we look at oil prices rose on Tuesday, and this was as US crude production is expected to plateau this year after setting a record in 2023. So when you look at the WTI contract, that added about 53 cents or 0.7% thereabout and settled around that $73 a barrel mark. When you look at Brent contract also, that settled around that $78 a barrel mark and was up about 60 cents or 0.7% thereabout. And when you look at US crude and the global benchmark, they have risen 2.3% and about 2% respectively for the year. US crude output set a record of 13.3 million barrels per day in December, and this was before pulling back to 12.6 million barrels per day in January due to winter storms. And this is according to estimates from the EIA that were released on Tuesday. Well, US crude production, of course, has weighed on oil prices for months, and this is as traders worry that the market is oversupplied currently, and this is amid a faltering economy in China, so demand concerns still persist. Oil traders were also monitoring efforts to negotiate a truce in Gaza and also looking for signs of further US military action in the Middle East. So that is the kind of action that we've seen coming in from the oil market as well. But when we take a look at the events that we should keep an eye for, from the US, you do have the trade data coming in, and China has the Forex reserves data, so keep an eye on those data sets. But in terms of corporate action, there's also India Bulls Housing Finance that has a rights issue that opens, and in terms of the last day to buy to be eligible for dividend, there's a whole host of counters, right from Bansali Engineering to Cholamandalam Investments, Concor, HPCL, SRF, Symphony, as well as VIP Industries. So keep an eye on all of those counters, and on the IPO front rather, you do have APJ Surendra Park IPO that closes. So keep an eye on that particular IPO, and in terms of IPOs that open, you do have Rashi Peripherals, Jana SFB, Capital SFB. So all of those IPOs, keep an eye on all of those counters. And the lock-in period also ends for ESAF SFB. So keep an eye on that particular stock as well. And in terms of other events, of course, you have Tom Barkin talking to the Economic Club of Washington and Bank of England's Sarah Breeden, who's going to be speaking at Economics event. So keep an eye on all of those speeches. But let's also take a look at all of the other news and updates that we should be keeping an eye on. And some upbeat news for the sports fanatics this morning. Global media conglomerate Fox, Walt Disney and Warner Brothers have announced a joint venture to launch a sports streaming service later this year. The yet-to-be-named service would offer an all-in-one package of programming inclusive of television channels such as ESPN, TNT and FS1. Subscribers would have the option of purchasing it as part of a streaming bundle from Disney+, Hulu or Max. And shifting focus to the auto world, then Japanese manufacturer Honda announced the recall of 750,000 vehicles in the United States on the back of airbag defects, a potential cause for collision. Meanwhile, General Motors will be doing the same with around 320,000 vehicles to address tailgate issues, a potential road hazard. And this was as flagged by the National Highway Traffic Safety Administration. Meanwhile, retail giant Amazon has announced that it will be laying off a few hundred employees across its healthcare units. Uncertainty over the impact remains. Roughly 115 positions may be eliminated. However, reports also suggest that as many as 400 employees could lose their jobs. And turning our attention to some earnings then, upbeat Q4 earnings sends the Spotify stock soaring. The Swedish music streaming giant delivered a 23% jump in active users, beating its guidance and analyst forecasts. While it was a party for Spotify, Snapchat owner Snap, like we mentioned, struggled to keep up. A sharp miss in revenues, a meager 5% growth versus 14% same time last year. Disappointing results fueled a bloodbath on the stock that plunged 30% in after-hours trade. And it was a Q4 fillip for carmaker Ford. Company delivered a top-down beat and better than expected annual guidance. Ford reported adjusted earnings per share of $0.29 on a revenue of $46 billion. Shares boomed 6% following upbeat results in after-hours trade. And while that was all the action from equities, we also had some important commentary coming in from US Treasury Secretary Janet Yellen, who believes that the US credit policy is in a good place and it would be a mistake to start cutting rates too soon. Speaking on a broader macro note, she believes geopolitics as well as financial conditions continue to pose risks to the economy. Resounding Fed Chair Powell's tone over rate cuts says that the central bank should start cutting rates later this year. So listen in to what Janet Yellen had to say. But with this, we're timed out on this segment. We'll see you with more news and updates on the other side.
Welcome back, and you're watching Market Cafe on ET Now. Let's keep it going and get an update what is happening in the Asian markets, because yes, when you're looking at it, surely that we're seeing a positive up move coming in, whether you look at the Hang Seng, whether you look at the Shanghai as well, all of them we're seeing strong positive up moves coming in. Shanghai up almost 0.2% in trade as well. Other than that, let's also look at what the other markets are doing. The Japan market, Nikkei, is also seeing a positive uptrend coming in, and obviously this is the follow through that we're seeing coming in also because the US markets have closed in on a positive note. ASX 200 too. Oh, okay. Nikkei maybe has fallen a bit as of now, but it was trading with a positive bias. So yes, we'll keep an eye on that. ASX 200 is up almost 0.7% in trade as well. So yes, all the Asian markets are trading mostly higher. We're seeing earnings coming in for all the markets. Only the Japanese stock exchange, that's the one that's a bit subdued as of now as well. So that is something interesting that we are keeping an eye out on as well. Other than that, obviously there were a lot of earnings, whether you look at it in terms of the Spotify numbers, Spotify technology, that was buzzing in trade as well. We had DBS Group that also came in as South Asia's largest bank as well. So yes, all these factors are coming into play for the Asian markets as well. And as of now, what we're understanding and what we can see on the screens is that the Nifty implied open is at a positive of around 0.56% uptick. Nifty implied is at around 22,124, 123 points uptick is what we're seeing. Keeping an eye on that. Positive opening at least is what is indicated, Shreyansi, as of now for the Indian markets.
Absolutely. Let's see how that pans out. But on this note, welcome back. Thank you so much for staying tuned in. Well, let's also shift our attention to the capital market then. FPIs have turned net sellers in the month of January, and selling was seen in 8 out of 14 sectors. In fact, my colleague Sharad is standing by to tell us which sectors have seen maximum inflows and outflows. Sharad, take it away.
Well, yes, after 2 straight months of buying coming in from the FIs, now if you look at the month of January, they have turned net sellers. $3.1 billion is the net inflows coming in. And interestingly, the majority of the sectors are seeing net outflows as well. Now, which are the two important sectors where they've seen the maximum inflows? The first one is the IT segment, $540 million of inflow coming in, followed by oil and gas segment with almost $418 million coming into the flows. Now, importantly, if you look at it, the sector which has seen the biggest amount of outflows, that happens to be the banking segment. That's roughly $3.6 billion of outflows coming in, and this is the biggest monthly outflow seen since January 2018. But the question remains is, what is the FPI allocations looking like for these sectors? And interestingly, we have picked up some names. FPI allocation in the banking and financials, that's roughly at almost 30%, but it is coming in, it's falling for the 7th straight month. And also FPI allocation in chemicals, if you look at it, it's coming in at its record low levels. And of course, the chemical numbers this time, majority of them have also reported a weak set of Q3 numbers as well. Now, the FPI allocation, if you look at it, at a multi-year high level, there are certain segments where FPIs are still bullish on, like cement, logistics, real estate and pharma, where the action would be coming in when it comes to the FPI allocation.
Okay, Sharad, thank you so much for that. But, do stay on with us because we have a lot of IPO action that is starting up today as well. 3 companies that are set to open their IPO for subscription. Sharad, which are these companies? What are the details about these IPOs? Could you just take us through all these details?
Well, yes, 3 important IPOs coming in, and roughly they'll be mopping up more than 1,500 crore rupees this week. And importantly, Rashi Peripherals yesterday, they got in 180 crores from anchor investors, and 2 important names coming in. First is the Madhusudan Kela's family office and also FI White Oak Capital. Now, the IPO price band ranges between 295 to 311 rupees per share. IPO size is roughly 600 crore rupees. 2 other banks are also there in the offing in the IPO space. Jana Small Finance Bank, they raised 167 crore from anchor investors, and the names include Citigroup as well. And if you look at the IPO price band, that comes in the range of between 393 to 414 rupees, IPO size at 570 crore. And lastly, Capital Small Finance Bank roughly raised 160 crore rupees. White Oak Capital and Nippon Life Mutual Fund are the important anchor investors participating in this IPO, and the IPO price band is 445 to 468 with the size of almost 523 odd crore rupees. Lastly, also there is a company, APJ Surendra Park, Calcutta-based group of hospitality companies, with the day 3 of the subscription will be there today. As of the second day, if you look at it, the numbers are coming at almost 6.2 times of the subscription rates.
Absolutely. Thanks, Sharad. So we'll keep an eye on all of those 3 IPOs. But the next big cue for the market is the MPC meet outcome, especially after US Fed Chair Jerome Powell recently said that rate cuts were off the table for the upcoming meet. The RBI is expected to maintain repo rate, but the stance could soften, and this is according to experts. Their commentary on growth will be keenly watched. In fact, Gaurav is standing by with a snapshot of what should be penciled in for this particular meet.
Yes. So RBI is going to hold the MPC meeting, and it will conclude on 8th February. And let's see what street is expecting from the meeting. So basically, if we look at the repo rates, it has been stable since February 2023 at 6.5%, and this has been stable. If you look at the last meeting, which happened in December 23, that was held stable for the 5th consecutive time. Now, if you look at this meeting also, now street is expecting RBI to hold the repo rate stable at 6.5% only, and this will mark the 6th consecutive time when the RBI will hold repo rate stable. Now, if you look at the past trend, we have seen that RBI has held the repo rate stable for the 11th month in the last 20 years, according to the experts. And if RBI continues to hold the repo rate stable for this time as well, this will mark the 14-month mark where the RBI will keep repo rate unchanged. Talking about what we can expect from this meeting is that we may expect the stance of withdrawal of accommodation to continue from RBI, but any kind of clues coming up from the stance changing from withdrawal of accommodation to neutral stance will be a key watchable, because this will be a very positive news for market, because we have seen the liquidity constraints are happening right now and liquidity is tightening, and this also comes with the liquidity over tightening risk is also hovering around us. So any commentary coming up on the stance change back by the RBI, we may also look at any kind of commentary on the growth, because RBI has already said that the GDP growth is expected to be at 6.5%. So any bullish view on that, because the interim budget has also come out, so any bullish view on that will also be a key watchable for this meeting. And lastly, RBI is expected to support the liquidity for banking through VRR to reduce over tightening risks. So any kind of commentary coming up on this field also will be an important factor to watch out for from this meeting.
Thanks, Gaurav. Let's also switch our focus to Paytm's VSS. Now, after the meeting with RBI officials, sources are now saying that Vijay Shekhar Sharma, or VSS as he is commonly known, and other Paytm officials also met with the finance minister to seek intervention against the RBI's directive. Ankur Mishra is standing by with more details. Ankur?
Yes, after having met Reserve Bank of India officials on Monday, a day later, Vijay Shekhar Sharma has held meeting with Finance Minister. Now, in this short meeting, as per sources, there was no commitment which was given by the Finance Minister to Vijay Shekhar Sharma. However, Vijay Shekhar Sharma did put forward his concerns after Reserve Bank of India's order on Paytm Payments Bank. Similarly, we understand through sources that in the meeting which was held with Reserve Bank of India, there were relaxations which was sought on the order on Paytm Payments Bank. The relaxations were sought on extension of deadline among others, which is till February 29th. However, sources have clearly informed us that there is no way forward which has been suggested by Reserve Bank of India. There is no remedy which was suggested by Reserve Bank of India. So all in all, the status quo is continuing after Reserve Bank of India had found few violations as per sources, and these violations included KYC, anti-money laundering. These violations included violations of licensing norms among others. So the status quo still continues even after the meeting of Reserve Bank of India and Vijay Shekhar Sharma. Now we need to wait and see that what company actually is doing for complying with the order, and also in terms of customers who are related to Paytm Payments Bank.
Okay, thank you so much for that. But let's move on and talk about Nykaa, because that reported its numbers yesterday. Numbers were overall in line. Yes, we did see a decent set of numbers coming in from Nykaa. But what was a bit of a surprise or a bit of a concern that came in was in terms of the con call highlights. Because in terms of the BPC segment, seems like, you know, there was a higher discounting that was there for the prestige brands that was offered because there was a rural slowdown. So, you know, to attract customers, they had to give higher discounts. Other than that, you know, new customer acquisition is something that the company said is going to be their key focus area, whether you talk about the BPC segment or even in terms of the fashion business. Priority for the company is going to be in terms of is growth versus the margins. So when you look at it in terms of the BPC segment, maybe those contribution margins could be at these subdued levels, and we've seen a bit of a fall in the BPC segment contribution margin, and that is what something maybe could be a worry, and they could remain in that range for the short to medium term is what we are picking up in terms of the con call highlights that have come in. Other than that, obviously, you know, the company said that the market share has not declined in the online BPC segment and is in line with the previous years as well. Fashion business, the priority is going to be growth and profitability, and the sneaker side is doing quite well for the company. Obviously, they've had that recent tie-up with Foot Locker as well, which is a great opportunity for Nykaa Fashion. So yes, only a bit of a concern that could come in is in terms of the contribution margin, which could remain at these levels in the short to medium term. But let's also listen into what the management had to say on the BPC segment. Here's a bite.
Premium/prestige beauty was a very small percent of the overall BPC market, so it was incredibly under-indexed. So it is growing off of a smaller base, so there is more opportunity for those brands to continue to grow faster than the platform. That's one. Second is, as Nykaa, we strongly believe in continuing to drive awareness for and continue to do business in the premium prestige space, because these are the kind of brands that drive strong customer repeat and loyalty. And as I said in the beginning, it's also just generally better unit economics for us. So we're happy with the results that we're seeing with the prestige brands. But again, it's coming off of a very small base. So, generally the whole market needs to grow. And that's when we'll start to potentially see better or see positive impact from a gross margin perspective.
Okay, surely that's the update that has come in on Nykaa, but Britannia too reported its numbers. When you look at Britannia's first quarter, it seems like an inline set of numbers, especially in terms of the revenues and profits were in line with what we were expecting. But the margins of the company, that was a slight bit of a surprise, is what we could say, came in better than what the street was expecting. 19.3% is what the margins came in at. We were expecting it's around 18.9% in terms of the margins of the company. So yes, that's on that front. Surely we are seeing an improvement coming in over there. Other than that, in terms of the volume growth of the company, we were expecting around 2 to 3% volume growth. Now, this is an inferred number that has come in from analysts that implies that it is somewhere at around 4 to 5%. So, at least that seems like it's a bit better in terms of the volume growth of the company, stronger than what the street was expecting. So, yes, a key factor to watch out for will be, in the con call that will be happening this morning. We'll keep an eye out on any trajectory that they give in terms of the volume growth for the company as well, because seems like that was better than what the street was expecting. In terms of overall, when you're looking at it, the realizations also, the top line was muted due to lower realizations, but the cut in prices that they've taken, price deflation that has taken, that is something that supported overall the margins, beg your pardon, the volumes of the company. Other than that, in terms of the profitability of the company, what we're comparing is the adjusted profit, because last time there was a one-off item of around 300 crores. So yes, when you compare it after adjusting the 300 crores, or approximately 300 crores, your profits of the company are down by around 0.25%. So that's a key factor to watch out for. Management highlighting that, they are continuing to invest in their brands. They're going to be staying price competitive as well. And they will be driving market share with sustainable profitability is the clear objective going forward, and they will be keeping a close watch on the commodity prices. So yes, that's what the update is coming in terms of Britannia. We will be waiting out for more updates in terms of commentary that one could watch out for from the con call that will be happening at 10 a.m. today in terms of the outlook, where do they see the pricing going forward as well. And when you look at it as of now, CLSA is maintaining the outperform rating. Target price of 5,932 rupees is what they've given for the Britannia's stock, and let's keep an eye out on that.
Absolutely, let's keep an eye on Britannia. But in a significant development, the Standing Committee on Finance recommends a reduction in GST on health insurance premium. Both insurance companies and healthcare providers advocate for lowering GST from 18% to 12%, citing its impact on growth. My colleague Anurag Shah is joining in with more details.
So hope on reduction of GST on health insurance has increased. Now the Parliament panel has suggested for reduction on GST for health insurance. This is a demand from health insurance companies and healthcare providers from long time to reduce GST. Presently there is 18% GST on insurance premium, so which is the biggest dampener for penetration of health insurance, and data suggests, last 2-year data suggests that there is a continuous 20+% premium growth is there in health insurance. Presently the growth is around 23 to 24%. At this rate, health insurance premium is growing, and health insurance segment has also become the biggest market holder in the general insurance space, with a 39% market share health insurance industry holds in overall non-life insurance sector. So the data also suggests that if the GST gets reduced from 18% to 12%, there is no loss of revenue to government, because at which rate the health insurance is growing with more than 20% continuously, there is no loss of revenue to government also. So now the government panel has also suggested for the reduction in health GST on health insurance. So we have to wait for next GST Council meeting, where the decision is likely to be taken up for reduction on GST on health insurance.
Absolutely. Thanks, Anurag, for all of those details. But with this, we're out of time on this segment. We'll see you with more news and updates on the other side.
When I present,
take a look at the stocks that you should keep on your radar on account of earnings as well as news flow. Ashesha is standing by with that list. Ashesha?
Up, let's talk about a couple of earnings candidates then. At Berger Paints, it has reported strong set of numbers. Revenues have grown by as much as 7%. Volume growth stood at about 9%, while value growth was at 6.5% on a year-on-year basis. Gross margins and EBITDA margins have also expanded on account of lower raw material costs in the quarter gone by, and margins stood at 16.7% versus 13% that the company had reported same time last year. All in all, very strong set of numbers. Keep an eye out on Berger Paints. Apart from this, Biocon and other pharmaceutical companies, the likes of Lupin, will also be in focus, and this is on the back of US FDA action. First up, let's talk about Biocon, where the company has received ANDA approval from US FDA for a leukemia drug, so keep an eye out on this one as well. Lupin, meanwhile, has received ANDA approval from US FDA for an eye infection, so keep an eye out on Lupin as well. Meanwhile, Max Financial over here, company has received IRDAI approval for capital infusion to the tune of 1,612 crores, which means that Axis Bank should be able to take its stake up to as much as 20% in Max Financial by infusing 1,612 crores. So an important development that has taken place. Max Financial and Axis Bank will be in focus on account of this. Meanwhile, lastly, let's also talk about Gensol Engineering. The company has gone ahead and raised nearly 900 crores via preferential issue. So on the back of these fundraising plans that have gone through, keep an eye out on Gensol Engineering as well.
Okay, Ashesha, thank you so much for that. Those are the stocks to watch out for. But also, Ashesha, that was important stocks, but Radico Khaitan, that's something that reported its numbers as well. Seems like a good set of numbers came in from the company. Could you give us a breakdown on how it's looking like? What are you doing in terms of the number crunching? Anything interesting there?
Well, yes, very strong set of numbers that have come in from Radico Khaitan this time around. Revenues have seen an uptick of a solid 47% on a year-on-year basis, and a good set of numbers this time around was aided by volume growth, especially from the prestige and above segment. Margins have also expanded by as much as 50 basis points on a year-on-year basis. Let's talk about the volumes in particular. As I mentioned, prestige and above segment was what aided growth. P&A segment has seen a solid volume uptick of 20% on a year-on-year basis, and IMFL segment on a whole has reported growth of about 4%, and that is because the popular segment declined by as much as 11 to 13%, but P&A segment is what aided growth this time around. As far as the net debt figure is concerned, that too has declined by nearly 15% on a sequential basis, and analysts believe that declining debt trend indicates that perhaps debt cycle has probably peaked out in the previous quarter. Meanwhile, we also have a note that has come in from Investec, where they say that the results were very good in the quarter gone by. They continue to deliver strong earnings growth despite ENA-led headwinds in the last couple of quarters. Innovation also continues, especially with the new product launch that they have done. So all in all, very strong set of numbers. P&A segment-led growth, and net debt has also declined, and brokerages have also given a thumbs up.
Okay, Ashesha, thank you so much for that. But let's move on, talk about two of the companies that are expected to report their numbers. Nestle, Q4 calendar year 23 numbers is what they'll be reporting. Better growth than what we've seen from other FMCG companies. Let's not forget food and beverage overall as a segment has been doing better than the HPC. That's the home care, personal care segment. That is where Nestle is benefiting, and that is why in the food and beverage, they're mainly into that side. So that is why a 9.9% growth in terms of revenues. Margins of the company expected to see a 170 basis point expansion on a year-on-year basis. Volume growth expected at around 5% as well. Other than that, overall, the domestic sales are expected to see a double-digit growth led by the nutrition business, chocolate and confectionery business. High contribution is expected from out-of-home consumption, and obviously we are seeing the margins that will be aided by operating leverage, deflation in edible oil, wheat and packaging, and dairy prices as well. So keep an eye out on commentary that could come in from rural front. Milk and nutrition segment was the commentary on that front, and pipeline launches is something we're watching out for from Nestle. But let's move on and also talk about Tata Consumers, because that's also expected to report its numbers as well. And in terms of numbers that we're expecting from Tata Consumers also is a decent set of numbers. These Nestle and Tata Consumers are expected to be the outperformers versus other FMCG companies. Tata Consumers too is mainly into food, beverage. That's the side that they are focusing on, that FMCG company, full-fledged food and FMCG company. So yes, they're expected to see an 8% growth approximately. Margins expected to see an expansion of around 100 basis points. Strong double-digit growth in food business. Soulful, Nourishco expected to see a good growth as well. Margins expansion is what we're expecting. International tea business, that could be soft for the company. US coffee business, that could be a bit subdued. That's where one concern could come in. But other than that, let's watch out for overall the market share trends for the tea business. Update on the latest acquisition, what's that shaping up like? When is that completion coming in? Synergies, when will that start coming in as well for the company? Are key factors to watch out for from Tata Consumers.
Absolutely. Let's also take a look at some other news and updates coming in then. The death toll from the devastating wildfires that swept through central Chile has risen to 131, with over 300 individuals still unaccounted for as the fires seem to be subsiding on their own. It marks Chile's most fatal catastrophe since the 2010 earthquake. And the Uttarakhand Assembly may pass the UCC 2024 bill today. The bill contains the laws relating to marriage, divorce, succession, live-in relationships, as well as other related matters.
And update on the weather front is that India continues to shiver in cold. More snowfall expected in Kashmir Valley as IMD issues snow alert. West Bengal and Assam brace for rain as cold wave grips the nation. Let's get an update on in the world of cricket then. Coming to a spot side, overall performance by a young guns takes India to the finals of the Under-19 World Cup. India beat South Africa in semi-finals to enter the 5th consecutive final of the tournament.
Well, with this, it's curtains down on this edition of Market Cafe with me, Shriyansi Singh and Vinny Motiwala, as well as the entire team that put this show together. Thank you so much for watching. Stay tuned because the market takes the action forward.
Hello and welcome to ET Now on the Go.